about the market and how crazy it is right now. We haven't seen this kind of stuff since like 2005. So it's been like 15 years since we've seen this market climate that we're experiencing right now. So I want to talk a little bit about what that does to us as real estate investors. So we're going to spend some time talking about that today, and then we're going to open it up to some question and answer. And then next week, we've got a property that actually a couple of students are in on. So we're going to be walking through that one. It's almost done. We're about ready to put it on the market. That's coming next week. So make sure you don't miss that. I just got an update today. We are still waiting for the granite to go in on that property. We've had some problems with COVID-19 and our ability to get materials because of what's going on with the pandemic. We have just been patiently waiting for our materials to show up for that property. But as soon as those are there, we are done with that property and we're throwing it on the market. And I'm sure we're going to be seeing some of the crazy stuff we've been seeing on some of these other properties that we've been listing. So we're going to be going through that today. We're going to be talking about a lot about finding actually today. The interesting thing about the market, it's a seller's market. And the unfortunate thing is investors, especially short-term investors like fix and flippers, wholesalers, we have a short turnaround time. So in a seller's market, we're happy about it because we're able to sell these properties and get them out on a quick timeline. The problem is finding new properties. That's what we're really struggling with right now. So we're going to talk about some of the strategies that we can use to bypass some of the things that uneducated investors are facing as they're going out and finding properties in this market climate. Let's go ahead and dive in. So this is going to be another one of those question and answer kind of format. We have several formats that we do here on the call. We have our guest speaker format. We have our walkthrough format. This is going to be more of a question and answer kind of format, but I do have some stuff that I want to share with you today as we dive in and talk about what's going on in the market. Obviously, it's a seller's market right now. That's definitely true where I live in Salt Lake City, Utah. But as we look across the country, we're seeing that in most of the metropolitan areas, sellers are really able to push, which usually means that we have low inventory. Now, low inventory simply means that there are fewer properties available for sale than there are buyers for those properties. So right now in Salt Lake City, we have about one property for every 4 buyers. That means that 4 buyers are going away sad every time a property sells. That's a great thing to experience as an investor when you're done with a flip and when you're selling. It also creates a real problem as investors when we're looking for properties, when we're looking for inventory, when we're looking for properties that we want to purchase. I wanted to talk through some of the things and really just kind of do a roundtable. If you guys have thoughts that you want to share, we can kind of dive into the pros and cons of each of these finding strategies. I just found a property today that I just put under contract. We made an offer on it today that we're going to consider doing as a fix and flip. It's in Sugar House, which is a suburb of Salt Lake City. It's actually the closest to downtown. It's a very popular area for professors at the University of Utah, for people who work directly downtown because of how close it is. This is an area that really got developed out in the early 1900s. A lot of these houses are built in the 1900s, the 19-teens, the 1920s, and then you really don't see any development until the 1980s. And then in the 1980s, you see a wave of people coming through and rehabbing these properties. A lot of these properties that we're purchasing in the Sugar House area, the last time they were remodeled was in the 80s. Now, 2020, 40 years later, we're looking at remodeling these properties again and bringing them up to current spec and then putting them back on the market. This property was brought to me off market. See, the tough thing about this seller's market is there's no inventory. As soon as anything goes on the market, it sells for $20, $30, $40, $50,000 above asking price. And as investors, we need discounts. So looking at the market, looking at the MLS isn't going to work for us. And if you guys have watched the Finding Off-Market Deals on Tap class, we talk about the drawbacks of only relying on properties that are listed on the MLS. It really limits, especially in a seller's market. We're seeing that really hard right now for those of you that are looking and paying attention. You got to rely on off-market deals. In this seller's market, how can we survive as buyers? This property was brought to me by a relationship that I haven't heard from in a year and a half. I've worked with him a lot over the last 10 years. In fact, he was one of the earliest relationships that I created as I started my real estate investing career. We talk about the 5 currencies a lot, right? We talk about time being the most important, knowledge being the second most important, relationships being the third most important currency, then credit and money after that. So the 5 currencies of the wealthy, obviously you can learn more about that in the mindset of the wealthy investor class class, that third currency, relationships, is one of the most important things, one of the most important currencies that I've used as I've operated as a real estate investor, as that's been my career and my profession. Relationships has been, I would say, one of the top things that I've relied on in order to find properties, in order to find money, and it hasn't failed me. Today is no exception. He brought this property to me off market. It's a pocket listing. So a pocket listing, for those of you who don't know, let's talk about what pocket listings are for a second. A pocket listing is a listing that's going to go on the market. It's going to be on the MLS, an agent's going to list it, etc., but it hasn't quite made it to the market yet. This was a relationship that he had inside of his brokerage. That agent came to him and she said, hey, I've got this property. I'm going to be listing it later today. If you know anybody that would want to jump on this property, let me know. And he said, I know just the guy. And he called me up and he said, hey, do you want this property? We walked through the numbers, we talked through it a little bit, and I said, you know what? I need to get Steve to walk through it. My contractor walk through it in order to have a real good idea of what I want to spend on this thing. But let's go ahead and put it under contract. So as we're going through our quick analysis process, if you look at the class off-market deals on tap, we go through the deal spotter system where we're generating leads, doing a quick analysis, and then we're making an offer. And it's a very rigid structure to that. Sometimes that rigid structure doesn't work. It's got to be more fluid. I wasn't able to do my quick analysis yet. I wasn't able to get my ballpark estimate on what it was going to cost to fix this property. What we did is we put it under contract before my contractors had an opportunity to walk through it. He's not going to be able to walk through it until Thursday, and here we are on Tuesday. But they brought me this property. It's going to be listed tonight. I want an opportunity at it. I've got first right of refusal on it, right? I can jump on this thing if I want. They were asking $350, our ARV on it. Maley ran an ARV on it earlier this morning. $475 looks like something we can pull off. So we made an offer on it without having the full quick analysis done. It's okay because we still have our long analysis. When my contractor comes back to me with that bid, we can go back and say, well, we didn't know this and we didn't know that. And because of those things, we have to lower the price. So we got to lower it. We're going to do an addendum or a counter offer. And we're going to lower that price down to $300 or $280 or whatever the case might be, just to tie this thing up so that it didn't go out to all the piranhas that are out there right now trying to snatch all these listings up. I went ahead and put it under contract. It's strategic. It's a strategy to take it off the market, to give myself enough time to do my quick analysis, to do my long analysis, so that I can decide whether I really want this thing or not. And the nice thing is, like we talk about in the finding off market deals on tap class, if I decide this is a bad deal, I can always back out. I don't have to do it. I can terminate the contract with a simple cancellation addendum. The seller doesn't even have to sign. Only I sign it saying, hey, we're canceling this inside of the due diligence period. And then I can move on to the next one. Because of the seller's market, I'm a little more aggressive. I'm not going to take as much time on my quick analysis. I'm going to be making my offers a lot quicker than if we were in a buyer's market. In a buyer's market, I can take my time, right? There's way more inventory. There's way more properties on the market than there are buyers. And I've got all the leverage when I'm buying. So I'm going to take my time. I'm going to run my numbers. I'm going to make sure. If not, I'm going to move on to the next one and not even bother with making an offer. But because it's a seller's market and because I'm struggling as a buyer right now, I'm just going to make offers on everything. And then I can adjust it in due diligence, right? And the nice thing about doing it that way, if you can pull it off, sometimes you can't, but if you can pull it off, the nice thing about doing it that way is that by the time you get around to actually figuring out what your numbers are, I only want to have them lower the price once. Because if you go back 2, 3, 4, 5, 10 times, they're going to be like, look, dude, if you don't want this property, then, get off the pot and let someone else make an offer. It's a seller's market, right? We got plenty of buyers. So I only want to go back to them once and say, hey, price adjustment. So I'm going to wait until my inspection's done. I'm going to wait till I have a very fine pencil bid by my contractor. I'm going to wait for all those things, my meth test to come back, my mold test to come back, my termite test to come back before I go back to the sellers and say, hey, I need a lower price, right? I only want to go back to them once. So I want to make sure I've got all that data to be able to make that decision. Hopefully that makes sense. Any questions on that strategy and why we're using that strategy in this market climate right now?
You gotta be aggressive.
Yeah, we gotta be, when we're buyers in a seller's market, we gotta be aggressive, right? Just like when we're sellers in a buyer's market, we gotta be aggressive.
Normally as investors, we are aggressive compared to the average buyer, but I think they surpass the investors.
Yeah. Absolutely. And one of the things that we're seeing a lot of right now, and you know what? It's been a seller's market for a second. I mean, man, it's been 4 or 5 years since I've even seen like hints of a buyer's market. We've really developed a lot of strategies to be able to tackle buying in a climate like this. I want to open this up to a roundtable. Let's talk about some of the ideas, because I see a lot of students out there who will just, they'll wait and they'll see they look at Redfin and they look at Zillow and that's it, right? And if it shows up on Redfin for sale, if it shows up on Zillow for sale, then it's a potential deal, right? But we have a whole class. We've got our entire off-market deals on tap class where we talk about going out and finding deals and being aggressive as buyers to be able to find deals in a market climate like this. What are some of the ideas that you guys have? What are some thoughts that you guys have as far as tackling deal finding in a market climate like this? And let's talk about the in and outs. I mean, there's always pros and cons to every avenue of deal finding, to every avenue of real estate investing. Let's talk about some of the ins and outs of that.
One of the hardest ways, in my opinion, is knocking on doors. Knocking on doors is finding people that nobody else is talking to, most likely. And if someone has talked to them because they're in maybe foreclosure, speaking to somebody face to face is different from making a phone call.
It's funny you say one of the hardest ways, because if you talk, it depends on who you talk to, right?
If your wife
you talk to
wants it.
Maylee, she'd be like, hey, that's the easiest way to find deals, right? But she has a background in knocking doors. There are different strategies that fit better with different personality types. And that's just how it goes. And really, when you're first starting out in real estate investing, you've got to try out a bunch of the different techniques and a bunch of the different strategies in order to figure out which one matches best with your personality type. I may say, hey, look, the best way to go is to talk to these foreclosures, these pre-foreclosures. That's one of my favorite ways. And you're like, okay, now you got it in your head. Okay, that's Mitch does it that way, so that must be the best way. And then you get out and you hate it because you're talking to people who are miserable all day long, right? And so if it doesn't fit your personality type, there's so many different ways to find leads out there. One of the ways that Maylee and I talked about today is we're going to kind of revisit the methamphetamines contamination list, right? So we actually, as real estate investors, I mean, I joke all the time, I think I've made more money on meth than meth dealers do because of the houses that we flipped and the discounts that I've gotten on these houses, right? In certain parts of the country, this works really well. I know in the Mountain West, meth is a way bigger problem than in other parts of the country. East Coast, I don't think it's as big as a problem as it is, Mountain West, West Coast. So you're going to have to kind of gauge that, because maybe you won't have as much inventory to go through as we do here. But we're going to revisit that and start looking at the county health department records. Anytime the county health department is made aware, and this is for, I'd say, pretty much every state in the country, anytime the county health department is made aware of a house that's contaminated with methamphetamines, they quarantine the house. They'll evict you, whether you own it, whether you're renting. They will kick you out, and you have to go figure out what you're going to do, because you can't live there anymore, right? And they quarantine the house. They put a big placard that's got those yellow and black stripes on it, so you can't miss it, right on the front door that says quarantined by the county health department. And they'll kick you out until you take care of the problem. And you have to hire a licensed individual to come in and fix those, the contamination, to come in and remediate the methamphetamines. We talked about this, I think 2 weeks ago. Was it 2 weeks ago, Tyson, that we talked about this for $39.90?
I think it was about 3 weeks ago, because we were there while she was still working on the staging, which was a 4-day process. Right. And then
now we're under contract
about a week after that, because we had to lock up a few things. It's been a contract for about 2 weeks now.
Okay. So we faced this a few weeks ago where we had to remediate meth in a house that we Airbnb'd, right? That Wade is involved in that deal. But now, we're going to be making around 80,000 on it because we remediated it. We use some of the strategies that we talk about in, with marketing properties. And because it's a seller's market, we had, 12 offers come in immediately above asking price. We ended up taking one that was $30,000 over with an appraisal guarantee. By the way, just a quick update on that property. It did appraise. So we didn't have to use that appraisal guarantee. It appraised, weighed, they're past their due diligence. So it's smooth sailing to closing, my friend. And then we split up the profit. So congratulations, another one in the bucket, right? Another successful one here. But we can use that to our advantage as buyers, because not everybody is as educated as we are. Not everybody knows that meth is a lot easier thing to take care of in a property than most people think. And so it creates this fear, right? Because of the show that the county health department puts on, where they'll come and they'll kick you out of your house and they'll placard the front door, and then, it really drives fear. And so you have these scared homeowners that don't know what to do. A lot of them are even landlords, uneducated landlords that don't know what to do. And they think that their life is ruined because their property was contaminated with methamphetamines. They think they're going to have to rip it down or whatever the case might be. We'll come in and we'll buy these properties, and it'll cost us, we'll get a $30,000, $40,000 discount. It'll cost us $4,000 or $5,000 to clean up the meth, get it certified by the county. And then we go out and just do our normal flip on it. It ends up costing us, like I said, $4,000 or $5,000 more than what we usually put into a property. But we're able to get an additional $30,000 or $40,000 off the property because of the meth contamination. So they're a lot of times even more profitable than our run-of-the-mill properties that we get on pre-foreclosure or other means. So this is a fantastic, especially, people who are in the western part of the United States, Rosa, Charlotte, those of you who are kind of on the west side of the country here. I think meth is a little more of a prominent thing than it is on the East Coast. Maybe I'm wrong. I don't know. Any East Coasters out there that want to chime in on that? Yes, no, maybe so.
We're Breaking Bad, so we have.
That's right. Yeah.
We probably have a long list.
Yeah.
But, Mitch, I was going to ask you, because finding the houses really isn't as intimidating to me as finding the contractors to do the work, whether it be a meth house or not a meth house. But to me, that's something that's could get out of control cost-wise, and you have no real control over it at first. And so that's more intimidating to me than most anything, given that I have a little bit of experience doing it, and it's just hard to manage, I think.
So Charlotte talked about contractors and how that's a really frustrating thing, right? In this market climate, finding properties can be a frustrating thing, but that's not always something that's going to be frustrating. Whereas contractors, unless you're super, super lucky, contractors will always be something that's frustrating. And it's, there's a lot of really good contractors out there. The reason I partnered with Steve Clayton is because that guy has integrity. And that's something that, at least in my state, you don't always come across. In fact, it's rare to come across the contractor who has integrity, right? So somebody who won't steal from you, somebody who's going to do what they say they're going to do on time and on budget, or at least close to on budget, right? Within reasonable means of being on budget. So contractors are frustrating. Now, I would always start, and keep in mind, this is something that we deal with in the single family arena. Maylee and I also work in the multifamily arena. We do not have these problems when we're dealing with multifamily properties. We've got a $1.2 million project right now that we're working on in Ogden, Utah. Just the construction side is $1.2 million. On time, on budget. Everything is just like clockwork. We don't deal with that on the higher end stuff. It's the single family, the rehab stuff, the remodel guys, the handymen, the low end, general contractors that we deal with on the single family stuff that really have created a frustration for us. And I don't mean to rag on anybody. Listen, if you're a general contractor and you've got integrity, then you are doing what you're supposed to be doing. But there's a lot of guys out there who don't. And I've gone through contractor after contractor, fired one after another, guys who have either, cost me time, which is holding costs on these properties, or taken draws, and then the next day, this has happened more than once, taken draws of 30, 40, 50 grand, and then the next day call me and say, hey, I'm not showing up again. Or they don't call me and they just don't show up anymore, right? So, I've lost 6 figures on contractors over my 10-year career in real estate investing and in fix and flipping, because it's so hard to find people who are going to show up and do what they say they're going to do. So a couple of things. Remember, we have a triangle, okay? We have a triangle, and each point of the triangle, you have one of 3 things.
Hey, Mitch, I can draw this out while you're talking if you would like that.
Yeah, absolutely. That'd be awesome. You want to share your screen?
Yep, I'm going to do that.
So I also talk about this in the Fix and Flip course, which you can find, by the way, I put all of the education modules up on Flippin' Sexy Real Estate Education on YouTube. So the channel is called Flippin' Sexy Real Estate Education. It's on YouTube. I've got all the modules there, and that is where I'm going to be updating the education from here on out. Make sure you like it, subscribe to it, ring the bell so that you're notified, because we're updating stuff on a weekly basis. We're constantly adding new stuff to that channel. There's a triangle when we're talking about contractors. You can have 2 of 3 things, and you get to pick, right? So as we're looking for contractors, we've got 3 points that we only get 2 of. One of them is quality. The next one is price. And the next one is timeline, right? So you can have someone that's quick and someone that's cheap, but they're not going to be quality. You can have someone that's quality and has a great price, but it's going to take you a minute, right? This is pretty universally what I found. If you found someone that has all 3 of those things, you found a unicorn. Marry that person, right? And just have them do your work from here on out. But that is absolutely something that I found to be true in the contractor arena when we're talking about fix and flips here. Quality, timeline, and price, right? So we got to decide. Now, sometimes our investor DNA will lend to what we're going to be, what we're going to be picking. If we're all doing low end flips, if we're focusing on kind of the ghetto, the hood, right, and that's where we're doing our flips at, then probably timeline and price is what I'm going to be focused on. I want to get them quick, I want to get them done cheap, and I'll just move on to the next one, right? I'll make my profit, move on to the next one. But if we're doing high end flips, well, that's not going to be as much of maybe we sacrifice timeline, or maybe we sacrifice price, because we have more profit built in those higher end flips. Quality is definitely something that we need. And then you decide, hey, do I want to hold it longer, or do I want to pay this guy more? Whichever one's going to be cheaper compared to your holding costs, that's what you're going to have to find. Now, some of the things that I teach in that fix and flip course, there's a whole module on working with contractors. So if you want to draw out that triangle, Tyson, again, there were price, quality, and timeline. We only get to pick 2 in most cases, right? So it really is going to depend on your needs, and a lot of that's going to be dictated by your investor DNA, by where you're flipping and what you're working on. So you get to decide. But during the interview process, again, I talk about this in the fix and flip class. During the interview process, we're going to ask for references, and we're going to ask them, how was the quality? How was the timeline? How was the price? We're going to ask all 3 of those questions. We're going to get at least 3 references from every contractor that we work with. We're going to make sure they're licensed. Look, let's say we want to sacrifice, let's say price is an important thing to us, right? Price is the important thing. We want to make sure that they're cheap, that they're inexpensive. And so we start thinking of things that we can justify, and maybe your contractor having a license is one of those things that you justify to get a lower price. Well, if they don't have a license, then they haven't gone through a lot of the things that they need to know in order to make sure that, Tyson's getting a call. In order to make sure that they are meeting code, in order to make sure that they understand some of the things that are going to be important as we get into fix and flips. Like, for example, one of the infamous things load bearing walls, right? You don't want a contractor who doesn't know what a load bearing wall is, and they come out and they tear out a wall, and all of a sudden the roof collapses or the floor collapses into the basement, right? That's the last thing we want, because then it didn't matter what our price was. We got to go fix that crap, and that's going to be way more expensive than any money we saved, right? So there's a limit to the sacrifice that we make on price, right? There's a limit to the quality sacrifice that we make when it comes to price. Okay. So you can see here, Tyson sharing a screen. We've got our quality, timeline, and price, and we only get to pick 2 of those things. So you want to pick what 2 are most important for you, and then interview to that end, right? Obviously, if you can get all 3, great, but really, I would only count on maybe 2 of them. Any questions along that? Charlotte, did that help with what you were looking at? Maybe let's dive in further.
It does, but as far as strategies to find the right ones, I think that helps, because if through your experience, where did you go to find the better ones? How did you establish whether or not they were somebody that you were going to try using? I mean, I understand all of this, but it's, there's so many of them out there, and it's hard to know if you haven't used them. Even if they do come recommended, it's hard to know, because there's so many, when you're depending on the flip, I guess, but there's so many different trades that are involved that somebody might have had, oh, this guy was a great plumber, or this guy was a great electrician, but when it comes to being able to do the whole thing, I don't know. It just, I have a great guy, my guy that I've used forever, and I love having him do it, but he always just charges me by the hour for his guys, and that never works out. He always does a great job, but it never works out. And then if he messes something up, I end up getting charged twice, because then he charges me by the hour to come and fix it. And so it doesn't, I love him to death, but it just doesn't work out financially.
So a couple of things there, and let's kind of keep, let's keep you off mute so we can kind of have a back and forth on this. But first thing, let's talk about the by the hour, right? So I got a module in the fix and flip class where I talk about this. Some people do, half up front and half when they're done. Some people do thirds, right? Third draws. Some people do by the hour. I don't like any of those things, because in one way or another, you're going to kind of get screwed at the end of the day, right? As you're kind of experiencing on this. So the way that I do it, the way that I like to see it done, is Steve will have, if we got a sub, for example, coming in, Steve gives them a scope of what he needs done, and then has them assign a value to each item, each line item on that scope. So for example, we've got a plumber, Steve might say, hey, we've got master bathroom needs rough plumbing to the tub and needs finished plumbing to the toilet and the sink and the tub, right? And so that's 4 line items, and he'll have them associate a price with each line item. And then at the end of the week, every Friday, once that plumber's done that work, anything that's fully completed to our satisfaction, he'll go back and pay him for that line item. We provide all the materials, so we pay for those materials up front. So early on, and you know this because we've worked closely on a couple of flips, we pay for a lot of those materials up front, or at least early on in the project, so that they're on their way. Our guys aren't waiting for materials. When they show up, the materials are there waiting for them. They don't have to pay for them. They're already there, and they can go do their job. And then once that labor is done, they get paid on Friday for the things they did. The things they haven't done, they don't get a half draw up front. They don't get any of that because it's labor. They get paid on the back end. So once it's done, they get paid on Friday. So that's an important thing. And I've noticed a lot of that money flying out the window. Like, for example, you mentioned paying them hourly. You end up paying for things twice because they did something wrong, and then they're charging you for the time that they did it wrong and the time that they did it right to go back and fix it. That goes away, because at the end of the day, if it's not done right, we're not paying them for it. And you want to get paid for this line item, do it right. If you don't want to get paid for this line item, we'll pay someone else that price, but we're not paying you till it's done right. Does that help on
Yeah,
that, at least in that
and
area?
yeah, it's just you know, some people, as long as you're able to establish what's, as long as you have somebody knowledgeable enough to establish what's appropriate for each line item. Because
Yes.
at first I wouldn't know.
Yeah, no, and that's a good point. And that's why I love someone like Steve, right? Because for most of my career, I'd say I'm getting pretty good at it now, but that's only because I've been doing it for 10 years. For most of my career, I have zero experience in construction whatsoever, right? I mean, for those of you who know me well, I'm a hobbyist woodworker, but a hobbyist. I don't know what stuff costs, right? I just kind of put stuff together for fun. But as far as actually getting a project, I have no idea. I don't know what goes into it. I don't know the process. I don't know any of those things. Just vaguely, and up to this point, maybe enough to be dangerous. Someone like a Steve, who I can trust, is vital to my business system because he's the one that has to kind of go through that stuff. Now, the other part of your question, Charlotte, was how do I find somebody like a Steve? Where does that come from? Right now, I have worked with several people in the past. I will tell you, I'm not saying this is a universal rule. I'm just giving you my personal experience. I have been burned every time I tried to work with someone that was a cold lead. So if I found them on Craigslist, or if I found them on, the internet, or if I looked them up in the yellow pages, I've been burned every time I've tried to do that. Um, it was through relationships, through that third currency of the wealthy, right? It was a referral. Somebody who I knew actually was one of my mentors in real estate investing that said, hey, this is a guy I use. I'm starting to pull back on flips. I'm starting to focus more on rentals. He needs some work. Why don't you start using him a little bit? And that was Steve. And I started working with Steve. He was doing some odd jobs for me. And then eventually, as I started to work with him and realize this dude has integrity and he does what he says he's going to do, and most of these other guys are not doing that. It was through that, maybe 3-4 years of working with him that I realized, hey, this is someone that I joked about earlier that I want to marry, right? And so the business form of marriage is let's form an entity together, right? He's my partner in an LLC now, which is every bit as good as marriage, right? You got to deal with the relationship, and you got to deal with finances, and you got to deal with all that stuff, emotions, and all those things, right? So, that's really how that came about. And I honestly, guys, I don't have a shortcut for you. I mean, part of this is you're going to have to go and get some bruises, and you're going to have to get some bumps, and there's some fear behind that. And I get it. I had it too. But the only way you're going to get through this, and the only way you're going to get to where this is really a streamlined system, is to put the system together, run it, figure out where you need some oil and where you need to change out some parts, and then just keep doing that until it's a smooth running system. And that can take years. I mean, I'm still, I think that's a forever thing, right? Because once you get it running great, then you're like, perfect, let's expand into more things. And then, now you got more moving parts and you got to start the process all over again. So,
I want to
I wish I
comment
had
on
a
something we've
shortcut for
talked about in
you,
the past as
Charlotte.
well.
I think it's just one of those things that you're going to have to get some bumps and bruises. I will say, from my experience, referrals are better than cold contacts, though. Tyson, did you want to chime in on something?
Yeah. Part of finding a good contractor is something we've talked about in the past on a different call, which is interviewing contractors. Find referrals, interview contractors, and ask them questions so that you can just kind of vet them.
Yep. The interview process is important. Absolutely.
And there's also ways that you can, you can work with Cody Backus. Some of you know who he is. You can work with another business attorney and write up a construction contract. It's called a construction contract. And in this contract, you can set up the terms about when you're going to pay them, how often, how much, and you can set up these contracts so that you can incentivize the contractor to be early and under budget. And if he is, you pay him more money. And as he goes on, he gets closer to the deadline, you pay him what you said. If he goes later, you pay him less. You can set it up like that.
Absolutely. No, I think that's fantastic and something that I've benefited from in my relationship with Cody as well. So that's great advice. Now, Charlotte, as we're talking about this, we talk about some of these things like how we're going to pay them, and it's not going to be hourly. What I've found is I have a lot more leverage when I bring up my expectations early on. If I wait until later in the conversation or later in the relationship to say, hey, I'd really like it to work this way, it's a lot more heart-wrenching to the relationship than if, when I first meet the guy, hey, I'm looking for someone that I can pay like this. And I'm looking for someone that can focus on quality and timeline. And I'm looking for someone that can do this, 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 and this. And they're like, oh, that's me. Because they're trying to get your business at that point, right? Oh, that's me, right? And then you've already laid out the expectations. Okay, fantastic. If that's you, then here's the thing. And here's the contract from Cody. And let's do this thing, right? And they've already committed to it. So
do you have a copy of the contract that you guys use?
Yeah, I can send you over a copy of the contract we use. Absolutely. Yep. Remind me after this call because I'll forget about it by the end of the call. So
okay.
send me a reminder and we'll get that done. But also, setting those expectations early, I think is a huge advantage because if you're early enough in the conversation, they're still trying to get your business versus now, like for example, this guy you're working with, you've already done things his way for so long that if you come back and say, hey, I want to do things my way, now there's going to be some heartburn. Does that make sense?
Right. Yeah, I think that's the way he's just done his life. Like that's just the way he does his life. And so he's comfortable with that. And he's always done an amazing job. And when I have extra money, it's not a problem, but yeah. I don't a lot of times. Yeah.
And I hate to say it this way. So kind of forgive any condescension to any other trades or anything out there, but we're doing this because there's millions or tens of millions of dollars to be made for us in real estate investing. And just like, I always talk about, hey, look, if mom or dad or grandma and grandpa aren't examples of how you want to turn out financially, don't take financial advice from them, right? We're not going to take financial advice from grandma if grandma was broke her whole life. That's not a good idea. It's the same with contractors, right? The contractors that we're going to be working with for fix and flips, they're not people who manage millions of dollars, and they're not people who manage tens of millions of dollars. So to do it their way is not the way.
Right. No, I get it. And his work is, he's like MacGyver. He can figure anything out and his work is always amazing. And I would never like have a problem paying. It's just that there's one guy in particular that works with him. He's just this guy that has a couple of guys that work with him. And the one guy, paying him $10 an hour is too much. It's like he just doesn't do things right. He doesn't get things done. He's like, so it's just one of those things. But these are good things. And I think that down the road, if I actually had a lot of work to do, that I probably could have the conversation with him. He'd be okay.
Absolutely. And it's easy as coming back to your general contractor or your, the guy that's managing this other person and saying, hey, look, as well as I do, this guy is milking the $10 an hour thing. So let's change it this way. If we want to keep working together, this is how I'm going to have to do it. My attorneys, blame it on someone else, right? My attorneys, my husband, my business partner, whatever the case might be. Somebody else is making me do it this way. It's not my fault. I'm sorry, but this is how we're ever doing, right? Yeah. I always blame it on Maylee. Maylee is making me do this. I'm sorry, guys. I don't know. She's making me do it, right? So find someone else to blame it on, and then just tell them that that's the way it's going to be, and that's the way it's going to be. And so in a way, say, well, my hands are tied.
So in a way, what I'm hearing from you, Mitch, is you're setting a boundary. It's like telling the contractor, you're free to do this however you want to, but just know that if you continue doing it this way, that's not how I want it, and I'm going to find someone else to do the job.
I like that.
But it's your choice.
That's a very good way of putting it, just setting a boundary. And a lot of times, this is a great example, Charlotte, and I've done this 100 times myself and probably most of the time handled it wrong. And that is that we give people freedom because we want allow them to go do their thing, and they're good at 99% of the things, but the 1% of the things that they're not good at is costing us money, and it's costing us time. And those are two things that we cannot afford as real estate investors, right? And so coming back to it and saying, hey, I gave you a lot of freedom. We don't have fences right now. I got to put one fence up right here. I got to protect this stuff. So we're just setting this one boundary. Everything else you have freedom with still. You're doing a great job on everything else, but this is the one thing I'm seeing that's actually affecting me and my livelihood. So this is the boundary we got to set up. I really like that perspective, Tyson.
Thanks, Mitch. I'm studying boundaries right now, so it's on my mind constantly.
Yeah, I've got your that book you sent me on my read list.
Yeah, it's so good. If any of you are curious about this book, I'm on round 3 right now. I listened to it twice, going on round 3, maybe 4 after, but it's called Boundaries, When to Say No and How to Take Control of Your Life by Cloud and Townsend. If you're interested for any type of title, let me know.
Yeah. No, I'm excited to read it. I mean, just based off of what you've told me that you've been learning, it's definitely on the top of my read list. So,
yeah. Quick side note about boundaries relating to real estate. Boundaries in general provide the space that relationships need to be healthy and thrive, and ultimately be successful. So in our real estate relationships with our contractor, it's going to be hard to approach your contractor or whoever it is that is injuring you financially or making you stressed out. But setting that boundary makes it so that they no longer have the power to injure you financially or stress you out or whatever the issue may be. And so they may not react positively. It may reveal the true nature of your relationship with them, and that relationship may end. And that if it does, due to setting a boundary, that's a good boundary, great. It's an efficient way to move on. Yeah. But if it responds positively, then you know that this guy is a good person, good to work with, and the relationship and overall outcome will improve.
That's I mean, just approaching this kind of from a philosophical standpoint, what we're looking for, and Charlotte, what you've been talking about is that third currency, right? Relationship. We're looking for a solid relationship of someone that we can trust to go and handle the construction side of our fix and flip business. And that's a very important, if you're in fix and flips, that's a very important part of your business. And for a lot of us, that's not what we're good at. I know for me, it's still not what I'm good at, right? And so I need that Steve. I need that guy who I can trust. But I can, looking back, I mean, I've made plenty of mistakes. In fact, part of the reason I do what I do with the coaching is so that you guys don't have to make all the mistakes that I've made, because I've made so many mistakes, right? I want to help you guys not have to go through what the crap that I've had to go through in the last 10 years. And still be able to get the reward, right? Because I'm very pleased with the outcome. But man, there's a lot of stress. So, maybe one of the things that I've done wrong in the past is I haven't set those boundaries. I've just been disappointed that they didn't read my mind and know exactly what I was looking for. And then I just cut off the relationship. Setting those boundaries may actually allow for a relationship we already have to blossom and grow into what we want it to be. And so, setting those boundaries, I think is something that we should attempt at least before, we just kind of wipe the slate clean and move on to the next person. Right. I like it. Okay. Charlotte, does that, I know kind of multifaceted question here, but does that answer what we were, what your question was?
It does. It does. It gives me a good start. And that's just personally kind of my big thing is you're only going to make as much money as the people doing the work are capable.
As good as our weakest link, right?
So, because it could just turn a good deal into not so good deal.
Absolutely. And I've seen that happen firsthand too many times. Luckily not, nearly the majority of the time, 4 or 5 times out of 100, but that's still too many. And those I'm 35 years old and I've got some gray hairs in my beard, and every one of them is named after a fix and flip that went wrong in some way, right? So yeah, absolutely. You don't want to have to deal with that if you don't have to. So yeah, no, I'm glad you brought that up. Absolutely. So let's open this back up. So we've talked about the market and how finding deals is really, really hard right now, and how more than ever we got to stick to the stuff that we've learned in the class about finding off-market deals, because finding on-market deals is going to be next to impossible in this market climate. We've talked about contractors and how to deal with those, the different personalities and the different things that we need to focus on as we're looking to build those relationships. We talked about setting boundaries. What else do we want to talk about? Anything in that realm, anything outside of that realm? The time is yours. We've got, 5 minutes before the top of the hour. We can go all the way half past if you want, but I'll let you guys dictate here.
There is a question in the chat for you, sir.
Yeah. Okay. So let's see. Do you prefer one contractor for everything, or one electrical, other for drywall, etc.? Do you pay labor and parts, or just labor? Okay, that's a good question, Mauricio. So I have one project manager. My project manager, his name's Steve. Originally, he was just a contractor. I just paid him as a contractor. Eventually, our relationship turned into, I joked about marriage. We started an LLC together, and that kind of sealed the deal, and we were official, and we're partners from then on out, right? 50-50 on our construction business. And now we act like partners. He gets half of the profit of anything that comes through the construction business, but he's also responsible for half of the stuff, and that is the manual labor part of the stuff. I'm responsible for the money and the properties, making sure that we keep our people busy, but he's responsible to make sure that the money and the properties that I bring in are handled responsibly by the contractors. So he's my one guy. He's my point of contact. He's who I call. If I've got a problem with electrical, I call Steve, even though Steve didn't do the electrical. He hired an electrician. If I got a problem with plumbing, I call Steve, right? What the freak is going on with this plumbing, right? The buyers called and they said they did their walkthrough and it's spraying all over the place. And so I call Steve and I chew him out, right? And then he calls the plumber and figures out what went wrong, and he handles fixing it. So that's kind of how I handle things. Now, that's not to say that there's only one way to do that. I have plenty of examples of people I've worked with, even students who do things a little bit differently than I do, where they are that project manager and they're the ones that hire the electrician and the plumber and the HVAC guy and the handyman and the carpenter and the guy that puts in the doors and all those things. So you get to choose how you want to behave there. What I based my decision and how I structured my business on is what I enjoy and what I don't enjoy. I don't like managing contractors. I don't like calling electricians and figuring out what time they're going to be there. I like talking to people about money, right? I like calling the guys and be like, hey, wait, I need 50 grand for this deal. And he's like, yeah, dude, let's go do it. And, those are the kinds of relationships and conversations I like having. And so that's where I focus my business, is where I enjoy it. And, granted, it comes with its own set of headaches. Sometimes Wade's going to call me and be like, where the freak's my money? And I'm like, I don't know, dude. I'm sorry. I'm working on it. Right. So it comes with its own, it comes with its own set of drawbacks. And I'm picking on Wade, but it's every relationship. There's positives and there's negatives to it. But at the end of the day, if you don't enjoy, for the most part, what you're doing, then you're going to hate life, right? You're going to hate real estate investing. You're going to think it's the worst thing you ever did. So pick the things that you like. Pick what you enjoy doing on a weekly basis. For me, or on a daily basis. For me, I like working with people like Wade and people like Charlotte and people like Curtis. And I really enjoy my relationships with these people. So that's where I want to focus my time, right? But that's not the same for everybody. Everybody's got a different personality type. So you really have to decide that for yourself and decide what you're going to do and how you're going to organize your business. Hopefully that answers your question, Mauricio. Is there anything I missed there? Is there any area of that we want to dive deeper into? You can come off mute if you'd like, if that's easier. One other thing while you're coming off mute here. So you asked, do you pay labor or labor and parts or just labor? So usually the way I do it, because early on I was like, hey, you tell me what the price is going to be. You handle going to Home Depot and getting all the stuff, and I'll just pay you whatever. And I found that materials was a way that they buried a lot of extra profit for themselves. And if I came in and was like, hey, we're chopping off, we're not gonna do this bathroom anymore. One time, I mean, this is a real thing that happened on like my third flip. So I came in, I'm like, hey, look, we're running low on budget, we're not gonna touch this bathroom, just leave it the way it is, we'll do the rest of the house. And he's like, we can't do that. I was like, why can't we do that? Just cut it off. You said it was, $3,000 or whatever. Just cut it off. He's like, well, the rest of the house, I buried all my profit into that bathroom. I'm like, why did you do that? Why not just be upfront and honest with me about what you're making? And I'm fine with it. You have to make money too. But then it creates this huge problem in the back end, right? So there was just too many examples of things like that happened where, they were burying extra profit into materials. And materials became an excuse, right? At least now, I mean, for example, Charlotte and I had a conversation yesterday about how granite is taking extra time on this property we're working together on because of COVID. At least I know that that's true, right? At least I know that that's actually the thing, because me and Steve handle getting those materials ourselves, and the materials show up at the property, and then the laborers show up and they do their job. And once their job's done, we pay them for the labor. They don't need money up front. That was another thing. That's a big thing, is when the contractor's responsible for getting materials, they want a big old check up front so they can afford to go buy those materials, right? And who's to say that they're not just going to take that and go to Vegas and you never hear from them again, which has happened to me more than once. So you don't want to do that. Materials will be there, show up, do your job, then you'll get paid. So we buy the materials ourselves, and then we pay for the labor. Hopefully that makes sense. There is more on that, by the way, in the Fix and Flip course in our Flip and Sexy Real Estate Education channel on YouTube. Go check it out. Make sure you subscribe, because we're adding stuff to that all the time. For example, this probably, because of how much we're talking about fix and flips in this webinar, we're going to be adding that to the Fix and Flip class. And then you guys can see kind of as a question and answer at the end. As you're going back through that class, you'll see all the ones that are relevant to that Fix and Flip course, or whatever the course might be. You'll see all those Ask Mitch Anything webinars. So, extra material that we get to enjoy as we're going through those classes. So make sure you subscribe. Make sure that you ring the bell so you're notified. Anything else? Let's open this back up. We're in that window now where you guys get to control. Let's keep this going as long as you guys want to. So are there any other questions regarding what we've talked about with finding deals, with funding deals, with contractors, whatever we want to talk about, anything outside that scope? Let's talk about it. Kathy, what you got?
Yeah, where did you say we can find these webinars that we're on right now, right? You recorded them. Where can we find those?
Let me pull that link for you. I'll pull that link right now and put it in the chat.
Okay.
Give me just a second here. So once we get to 100 subscribers, YouTube will be kind enough to give us an actual unique link. But for now, it's this crazy garbage here that random non-phonetic string.
Okay, well, I do have a question. Where I'm at right now, there's an area, I guess you could call it the ghetto, but it's really not. I mean, I've seen way worse ghettos. I mean, it's not that bad. I've been over there. I've looked at a few properties. They're really cheap, very cheap.
They're enough, right?
They're 50,000, 49,000, whatever. But the thing is that those, even if those are the values, they're all getting about $700 a month rent. And I look at it as it's a positive cash flow, even if you did a hard money loan. I mean, it's just, I'm like, I'm kind of torn. Should we just go grab a bunch of them? Because I've looked at several. Some are pretty bad. I can see why they're cheap, but These 2-bedroom, 1-bath, 3-bedroom, 1-bath, they're going for 6 and 7, and even, yeah, it's just incredible. That whole area, like maybe 10 blocks square, just hasn't gone up yet. And it hasn't matched the outer surrounding layer, which is all in the 120s and up.
Yeah.
So I'm thinking we should just go grab as many as we can afford to grab. I don't know. What do you think? I mean, is that
Yeah. I
scary
mean,
or not?
so at the end of the day, Kathy, it's a numbers game, right? This is why quick analysis and long analysis, 2 out of the 3 steps in our finding process,
Right.
have to do with numbers. And at the end of the day, if the numbers don't make sense, then the deal doesn't make sense. We remove all the emotion from it, right? So
Right.
if you're absolutely positive that 100% of the emotion has been extracted from what you're proposing to me, and it's all just numbers, and even like you said, use your words, you could get a hard money loan on these things and it's still cash flow. If that's the case, you have my blessing. But make sure that those numbers are solid. And what I
Right.
would do, if it's a block of real estate inside of a greater area, and you're saying that one block for
Yeah,
some reason,
it's not a block, it's about 10 blocks. It's a pretty big area. There's probably a few hundred homes in there.
is it defined by what I refer to as imaginary lines, like maybe a freeway and a major street? And
Yeah, actually kind
River.
of, yeah. Yeah.
okay.
And
So
I
you
did look it
want-
up on Trulia to see what kind of crime rate it had. Maybe that was the problem. It doesn't show up in red flag colors or anything. I'm like, huh.
Sure.
And I've driven down there, and I'm like, this is
So
interesting.
those imaginary lines, those are those are just defined, right? And we can't change those. If there's a freeway that is a line for real estate values, it's always going to be that way.
Yeah.
Now maybe I don't even want to suggest this because it's a little risky, but I was going to say maybe buy some on the outer perimeter and try to justify some comps across the street. But even then,
Actually, I was actually thinking of doing that because there is one on the outer edge, closer to the
Right,
higher end
yeah.
homes.
but it's risky, right? Because
Yeah.
anybody who knows is going to say, but the freeway, right? I see what you did there, but that street, right?
Mhm.
So it's going to be risky. I wouldn't run look. At the end of the day, we got to be conservative, especially in this market climate. We don't know what's going to happen tomorrow, right?
Mhm.
I mean, we're in such a bubble right now. Who knows if it's going to keep climbing for the next 10 years or if tomorrow at noon everything's going to crash and we're all stuck holding the bag. So
Right.
want to be ultra conservative. I would not, as you're running comps, I would not cross those lines.
Okay.
I would be conservative. Keep your comps inside of that 10 block square area that you're talking about and make sure that you can justify. Now, if everything you said holds true, even with your comps being inside of that area, that 10 block area,
Mhm.
dude, you're golden. Yeah, go whatever you need to do to buy as much of that real estate as possible. Absolutely.
Okay.
But every property, that's not a blanket yes on everything that's for sale in that area. Every
Right.
property you need to run the numbers on individually and make sure that it's going to pencil out.
Yeah, well, I've seen a few of them, and some of them are like, yeah, that's I'd have to spend 20,000 to get it up to par. No way.
Yep.
But there are a
Exactly.
couple in there. It's like, well, God, it just needs a little siding,
Yeah.
and
A little sparkle, right?
Yeah.
A little paint and carpet, lipstick on a pig.
Right. And one of them has a renter that's been in there for 4 years, and it's like, and they're not going anywhere, and they're paying, because that's another thing I wanted to know. Are they on time? Are they behind? Like a lot of people are. So
Yeah.
okay, I just because we've been tossing it around, and when I was kind of doing the mentoring before, he talked about the different types of properties. Do you want Walmart or a Nordstrom? I guess it was. I can't remember what they were, but
Right.
I guess the low end was Walmart, and I said, well, this was more like Dollar Tree.
Right. Yeah. Sometimes you have those, right? We just finished
Right.
one
But these
on
Dollar Trees can bring in some dollars. I
that's
mean,
right.
I'm
We
looking
got a
at
Dollar Tree flip recently.
Yeah.
Yeah,
Genesee,
I'm just
right? Is
looking
that
at
what
the
I'm thinking of?
$700 a month rent, and on a really bad day, we're talking maybe let's say $400 in loan mortgage expense, and I even added in interest on the money that we put down, and I put it at 12%, and it's like, Yeah, that's still $300 cash flow.
Yep.
You know, so even if you had your
Dude,
vacancy factor of 1 month or whatever,
$100 cash flow on $700 in rent. Is that what you said?
yeah,
Oh man, that's money.
yeah, it
Go
is.
after that stuff. Absolutely.
That's what I thought. Okay,
It's how
I just wanted
expensive
somebody
now.
to agree with me because I
I
didn't
want
want to do
in
this.
on it. I want in.
You want in on it?
Let's go do it.
I want one of those properties now.
Yeah,
I'll do
right.
something.
I think
Well,
everybody on this call will be like, you know what? I'll borrow money. I don't care. Let's go do it.
There are several. There are several, and I'm looking at all. And I've just driven down there, gone on there, and talking to the realtors. They're I mean they're on real. You know, in they are listed, but I know there's more because I've talked to several of the neighbors, and they're saying, well, you know, so and so down the street wants to sell. I'm like, damn, I think I have a little hot spot here. So
Yeah.
need to go check this out.
Yeah,
So.
absolutely. I'd jump on that, Kathy, and make sure,
Okay.
like I said, just before you pull the trigger on anything, make sure the numbers pencil out. But if they do, you have my blessing. Let's go do
Okay.
it.
All right.
Absolutely. That's awesome. You know, sometimes there's opportunities like that in certain areas. What city are you in, Kathy?
Oh, sorry, I had it on mute.
No, you're good.
Pardon me?
What city are you in?
I am currently in Fayetteville,
In Fayetteville, what state?
North Carolina.
North Carolina. Okay. Yeah. So, you know, I mean, they're kind of hidden gems, but they're all over the place. They're in every state, right? And there's those little areas that are like, hey, I found this and nobody else knows about it, right? And we go and we take advantage of those markets. And those are the kind of areas that millionaires are made in. So, Kathy, you have my blessing. That's awesome. Anything I can do to help with that, make sure you reach out to me.
Okay, I will.
We're going to take advantage of it.
Okay,
That's
well,
awesome.
I will let you know because I'm maybe I'll just put together a whole package of ones that I think are gems. Have you
Yeah.
take a look at them, and if maybe we can work out some kind of a package deal, and let's go do it because I can sit here and manage them because they're not too far. You know, I mean, I'm here.
Absolutely.
And we're actually buying a house. We're in escrow on another house, not too far from there. So, and that one's gonna be it's 130 that we're purchasing.
Okay. Nice.
So, all right.
Yeah, keep me posted on it. I'm happy to help.
Okay, thanks.
Yeah, you got it. All right, guys. Anyone else want to bring anything to the table? Let's jump in and discuss whatever you got going on, whatever we're focused on right now.
I got one more question. I'm sorry.
Sure. No, you're good, Kathy.
What was the name of that? I keep forgetting. I write it down every time and I still can't remember. It's the HELOC, but it's the other HELOC that you asked for that the banks usually don't know about.
Yeah, collateralized business line of credit. So I'll put it in the chat.
I have one of those.
Collateralized business line of. Apparently, I don't know how to spell collateralized credit.
Business line of credit. Okay, because we're gonna refinance this house that I'm in now. It's got a lot of equity in it.
Yeah.
And then try to pull money to use on some of these deals.
You know, one of the things, speed banking is something that I became very proficient at. And I've mentioned this before on this call. I didn't invent speed banking. You know, it was something that I was taught and I made it my own. I became an expert at it. The way I became an expert at it was watching the class over and over and over again. So, you know, one of the things you might want to do if you're considering executing on one of those speed banking strategies, Kathy, is go back and review the class.
No, I understand it. I actually used to sell a program back in 2000 and what was it, 2005. I used to sell this program to my clients. Yeah, awesome. And I had to explain it and show it on a chart and explain to them how you know it goes up and down, but you're saving the overall monthly average daily balance. And I mean, so I do get that. I'm trying to get Michael to, my son to like. Why is your money sitting at the B of A? Why isn't it, why didn't you just pay off your credit cards and then we go charge it up again? He says, I don't know. I'm like 20-something%. That's crazy. So yeah. So he's starting to get it now because he sees, oh yeah, I don't have a card payment now. And I said, yeah, and you had your money sitting there for a month and you could have done this. So so he just got a big bonus for re-enlisting into the Army. So.
Well, send him that link and he can watch the class.
He's seen it.
Cool.
He kind of gets it. but he's like, oh, it's just a lot of work to have to keep an eye on that. I'm like, oh, dude.
Not as much as you think. The first month is work. The rest
Yeah,
of it after that, smooth sailing, right,
it's
Wade?
automatic. Yeah,
No,
exactly.
Wade's been doing it for a minute, so
Mhm.
yeah, it's smooth sailing out there. Tyson's been doing it for a minute, so some of the people on the call have been doing it for years now, along with
Mhm.
myself. It's really just that first month that's stressful, and then once you have it all set up and managed, it's actually easier. So
Right.
you can tell them I said that.
Okay.
All right, thank you, Kathy. So, any other questions?
If
What about
nobody else ends up having a question, I have an
you?
idea to add value for the remaining time. You
Sure.
started the call talking about off-market deals and how you need to rely on that pocket listings, for example, to find deals in this competitive seller's market. So something that we could do if all of the students want is we could share my screen again on my iPad and we can make a list and brainstorm all the different ways you can find a property when the supply is not very good.
I like it. I like it. If we can get the participation, I think it's a great idea. So let's all participate in this. This is kind of where I wanted to go with this webinar in the first place. Today's call. This is a big problem, especially for people who haven't quite gotten into the hang of finding properties yet. If you're still working on your first deal or you're into your second deal, that finding thing is an obstacle, right? It's tough. And so I think this is a great exercise and a great opportunity for us to kind of go through some of those different ways that we can find deals while they're not readily available to us through the normal channels. So let's start off by just writing down some of the ways that let's start off by writing down some of the ways that we've already talked about. We talked about the meth list. We talked about relationships. I would more specifically say pocket listings.
Put in the title, hold on. And all of you know something, so I would love to hear you come out and help us out with this brainstorm session.
We'll go to the extent of participation here. So
Yeah.
that's kind of how these calls go, right?
Well, actually, I've been calling around. Because in California, it was different when I was, back in the day when I owned a mortgage and real estate office. We used to just call up the title rep and just say, hey, I need a list of labels for, this particular farm area.
Yeah.
And then I would send out, well, actually, I didn't do it, but the agents that I had under me, they needed to advertise or try to get deals. And I basically lived off of my referrals, but
Yeah.
they were just starting out. So they would send out, postcards and things to these areas and try to get clients that way. And so I called around here in North Carolina. It's a little different. They use, attorneys for everything. We didn't have that. And the title companies, I called them, and all they do is insurance. They don't do anything else. The attorneys handle everything. So I'm thinking, okay, so I'm gonna need to go get some relationships with a bunch of attorneys.
Yep.
And as I was looking for a loan, because we're trying to do a loan on this thing, and I was shopping around for, brokers, one of the gals that we had used in the past said, I said, by the way, you don't happen to know any hard money lenders around here? Because I'm trying to get a list of different ones I can utilize and, see who can give me the best rates and so forth. And she said, no, but if you find one, I've got a whole bunch of clients that could use that are looking for hard money lenders. I'm like, ooh, those are potential partners.
Yeah.
Or maybe even potential clients, because I know how to do a hard money loan. And so I'm thinking, you know what, I'm going to go find me a couple of hard money lenders. I know how to do a 1003. I know how to do a loan application. I've underwritten loans. So
Absolutely.
I'm thinking a lot of potential out here.
No, absolutely. And I think right now one of the things we need to add to the list, and then I want to come back and talk about a couple of things that that Kathy mentioned. But number 4 would probably be, I think right now, because of everything that's going on with the pandemic and all that stuff, with prices getting out of control, pre-foreclosures is still just a fantastic way. And that's just through the NOD list. And, Kathy mentioned it, title companies. Title company relationships are going to be a great way to identify those notice of defaults. With our meth relationships, we talked about meth a little bit, right? It's not just the county health department. So there's kind of two areas that we need to focus on if meth is going to be an important way for us to find deals. And again, I think Jen Johnson mentioned, not so much of a thing on the East Coast, but on the West Coast, especially in the Mountain West, where Tyson and Wade and I and Curtis and Charlotte live. It's a huge deal and a great way to find deals. But two areas. One is going to be your county health department, but two is going to be your meth remediation experts, because every single day, these meth remediation experts are out on jobs where they're like, hey, yeah, you've got meth in your house. It's going to cost you $5,000 to remediate it. And the people are like, I don't have $5,000. Those are the people, dude, meth remediation expert, call me and tell me when you have people that say that, because I'll buy their house and then I'll have you come do it as a reward for giving me the lead, right? So now a job that you weren't going to get, now you're going to get because you gave me the referral, right? So on that meth stuff, I'd say county health department, but also those meth remediation experts. And if you work your cards right, those relationships will just keep on providing leads to you. Pre-foreclosures is going to be from the title company. So we have NOD from the title company right there. We got a lot of really good ones from Kathy. Attorney relationships, bankruptcy attorneys. Right now, there's that attorney-client privilege, but you can approach an attorney and create a relationship with an attorney where they know what you do, and you can pay them for leads, or however they want to receive value from you. You can make them part of the deal, or you can, whatever the case might be. You work that out on an individual basis. But you say, hey, look, I know you can't just give me names of people you're working with, but go approach them and say, hey, we can potentially make this bankruptcy easier by removing your house and selling it off, settling debt. You may not even have to finish the bankruptcy. You may be able to settle all your debt with just the proceeds from the house, and I've got a buyer already lined up for you. Is this something you're interested in? And when the client says yes, then they can go out and share their information with you. So creating those relationships with all sorts of attorneys, the family planning attorneys, probate is a great way that we talk about in the Finding Off-Market Deals class on, how we find properties. But if you've got relationships with those family planning attorneys, a lot of times they're aware and can share with you information that would take you weeks to get through public channels. So relationships always beat any of the, mechanical stuff that we talk about as far as going to the county or getting online or any of that stuff. Relationships always beat it. PropStream, yeah. Software is another great way, right? Got a few new messages. Yeah, PropStream.
Is there a
Facebook.
software out there, a software program out there that, PropStream. Okay, I see that.
Yeah, PropStream, RealFlow. There's a few of them out there. I think PropStream's a great one. That's the one that Coach Dan recommends. I think it's fantastic. I haven't been over the acquisition part of my investing business for a minute. Maylee actually takes that part of it. So, and she's a realtor, so she has access to the MLS and other things. We've got a lot of relationships, but I think when you're just starting out, something like a PropStream or a RealFlow is an awesome tool.
Now, has anybody ever tried, I haven't done it, but I know some of my previous other loan officers that, I used to be friends with in California, they used to purchase lists from Experian on 30, 60, or 90-day lates. Do you know anybody that does that still?
I was going to get on the phone. Idea that I've never even thought of. So yeah. I have no idea. I don't know if that's something that's still available but I mean, that sounds like an awesome idea. So if you can find people that are behind on their mortgages by buying lists from credit bureaus, I think that's awesome. Now, was this pre-2008 though? Because a lot of things changed with Dodd-Frank.
Yes, it did. And that's what I didn't know if they.
Yeah, so that may be something that's not available to the public anymore, because of the Dodd-Frank laws. But I don't know. So see, I started investing in 2013. So I came in after all that whole mess. I've been working with Dodd-Frank my entire career. So that might be something you want to look into, Kathy, because
Okay.
that's a great idea.
Yeah, I was actually going to give them a call tomorrow because I was talking to a lender today, and I said, do you have any idea where I can find some lists? Because I've called title companies out here, don't do that anymore. And of course, attorneys, they have the, client privilege thing. So it's like, where can I buy these lists that I used to be able to purchase for $100 a month? I get a whole list of 100 foreclosures or pre-foreclosures, I should say, every month. And I can't seem to find a place to get that. So yeah. And I'm driving for dollars. We were just talking about that yesterday because we drove by. My son pointed one out. He says, that looks like a house that might need to be bought.
Yeah, absolutely. We've
Yeah.
got tools. Remember, we had several weeks ago, we had Jared Brinchley on, who's one of my students. Guy's gone out and created an incredible wholesaling business and developed software to help specifically with driving for dollars.
Right. I saw that.
There's software available. There's all sorts of tools that we can use to help with this kind of stuff. Kathy, are you an agent?
I used to be. I used to own a mortgage and real estate office in California back. When everybody crashed and burned, I did too, because I had no idea what I was doing. I had all my money invested in mortgage seconds. Big mistake.
Yeah.
So
and that was what crashed first, right? So
yeah. So, and we crashed back in 2006 is when it flatlined. 2007, January 2007 is when the first bank closed, and that was the end for us.
Yeah.
So I lost everything by October of 2007.
Oh man.
I know.
But we made it through.
Yeah.
And here we are. We're doing it again, smarter and wiser and better for it, right?
Yep.
Good. Good. Door knocking. I love it. This is an awesome list. Tyson, why don't you review the list real quick? Let's go through it.
Okay. I gotta draw the grass first, you know?
Gotta draw the grass.
To complete the picture. All right. So there's more ways than this, by the way. I made a list of 40 ways like last year, and I can't find the list, but pocket listing, which comes from a realtor relationship, who will come to you at some point and say, hey, I have this listing that I think no one's gonna want. Do you want it? And then you can say, yes, I do. The next one is attorney relationship. This was come from, I think, Charlotte. Attorneys deal with people who are in trouble. And if you have a relationship with them, they can say, hey, I have a client who really needs to sell their house. Are you interested? So that could work. Meth. And no, I'm not messing with you. If the numbers add up, it's just simple meth. You can buy that property.
Oh man.
All right, next. Pre-foreclosures, and I was writing down in orange sources for those. Title company, town, county records. Another option for those pre-foreclosures is attorneys, because they handle those sometimes too. Am I wrong about that?
Nope, not at all.
Another reason to have a good relationship with an attorney, right?
Mm-hmm. Always.
Next one, notice of default from a title company. Now, a little side note about this is you need to do something with it. If you have a title company sending you a list every week and you never do anything with it, that means they're constantly giving you value and you're taking away from the bank, the relationship bank. You need to give something back or else you're going to stop sending you that list.
Yep.
I learned that the hard way when I was new. So I'm going to put a little note right there. Give value back.
Or even first. Put /first, right? There's nothing wrong with priming the pump. I'm a big believer in I'm going to provide value to people, And then when I need something, the bank account's already full, right? I can make a withdrawal and I'm not doing it on credit.
And how can you give them value first? You could send them
Referrals.
clients. You could
Referrals.
write reviews for them.
Professionals love referrals. I send all my people to every professional I meet that I may need someday.
You can do that by referrals.
A lot of people are scared to give referrals. Referrals is some of the most valuable relationship currency you can possibly give.
And then Facebook. You could join
Yeah,
groups on Facebook.
Extend it onto any social media, right? Facebook/social media, which would include LinkedIn and all those, all those other things. Great way to network.
Yeah.
Absolutely.
Facebook, other social media. Other social media. And on these groups, you can be strategic about it. You can join groups that have a common interest of you, like hiking. You can post often in those groups, and then every once in a while mention something about real estate. Then someone will come out after you got some traction and say, hey, real estate, I've been interested in real estate. Or on these groups, you can also join groups that involve real estate directly, and they have meetups, they have like lunch and learns, they have meet and greets, whatever they call them, and you can go to these events and meet more investors. When you meet more investors, this expands your network, it expands your money pool, your skill set pool, and overall benefits you and them, because we're in the relationship business, right? So we're here to create win-win relationships for everybody that we work with.
Yeah, agreed.
Next one, probate. Probate is something that you can find from attorneys. You can find probate cases at the courthouse. Attorney. And title company, right?
Mm-hmm.
Title. PropStream or other software. We talked about other softwares. RealFlow. There is iOS software. That one's expensive, but so good. Investor Network. We kind of talked about that just barely with the social media stuff. And then apps. Mitch already talked about that, so I'm not going to mention anything about it. But guys, it works. Jared, the owner of this app, I'm friends with Jared on Facebook, and sometimes he just posted a screenshot of somebody who has been using his app to try it out, and they're like, hey, I used your app for this amount of time and I have a house under contract. This really works. Like, people respond. I'm not saying that results are typical, but it works.
Yeah.
And then driving for dollars is part of Big Flip and Deal. That's kind of how it works. You need to go do the work, and then Big Flip and Deal does it, like streamlines all the getting the contact information, and then contacting the person, and then the person, it puts the ball in their court, and they can reach back if they're interested. So it saves you dozens and dozens of hours of work that might be fruitless or might be fruitful. You don't know. MLS, some properties are found from the MLS, but most of them are not. Mitch has found a few of them in the last year from the MLS. So, but he's also found them from a realtor. Where is that realtor?
Number one.
Realtor relationship.
Yep.
That he has
a lot of them are
close with. And Mitch has taught this man how to analyze properties the way that Mitch prefers them to be analyzed, so that when he finds something and he analyzes it and it comes up the numbers are good,
he does the quick analysis for me, right?
And then he sends Mitch the property and says, hey, I think you would like this property.
Yeah.
And often Mitch does like that property, so he gets it.
Yep, exactly. And one thing I would add is number 14, because we can't end on 13. One thing I was at is 14 is Maylee's found a lot of luck off of expired listings. So these are listings that are past 360 days. that just sat on the market forever. And I'll tell you what, a seller gets past 360 days, especially in this market, they're frustrated and they're ready to just move that property for anything. So you can call and be like, hey, what's up? I'm interested in buying your property. What do we need to do to make this happen? And they'll tell you what they're frustrated with in most cases. And you can work around that, make sure your needs are met, and make a deal happen. So I love it. Tyson, great job with this. I love this this exercise that we just did. I think it was very useful and really hit the mark of where I was trying to go today with this call. And that is helping you guys find deals in this really stressful market climate. So hopefully that was valuable to you. We are half past the hour. In fact, we're 2 minutes over. So I'm going to let all of you get back to your lives, but we are going to be here next week, same time, same place. And I'll plan on seeing you then. In the meantime, I know there were a few of you who I mentioned, hey, get with me if there's stuff you're working on throughout the week. If you need some help, make sure you reach out to me, reach out to Coach Dan. We are here to help you guys with whatever you need. So you make sure you're taking advantage of that. Now, unless I hear from you during the week, be safe, stay healthy. I love you all, and we'll catch you next week. Thanks, guys. See you later.
Cheers.
Good night.
Bye-bye.